Good morning. So yes, we have observed in the market that catastrophes has been increasing. Natural catastrophe has been increasing in the past few years, last decade at least, not only in the size of the losses, but also in the frequency of these losses. So of course, the insurance industry is taking note of these trends, and they're trying to incorporate those potential losses estimates into their pricing models. We're seeing that not only for wildfires, but also for hurricane risk, for flooding risk as well. And this together with a situation where inflation is higher than in the past 10 years, which is pushing, for instance, reconstruction costs after natural catastrophes up, and also a hard insurance market where the rates are also up. So they need to pass these costs to retail customers.
Marcus, we've heard the industry go on for years about how a lot of businesses, consumers are underinsured. But that said, on the back of this story, there was analysis of just where some of the bigger reinsurers have pulled out of. And, you know, Florida has been one on the agenda for many, many years. Every time we see a problem there, more insurers decide to back away from the marketplace. And that's continued. So how do we think about insurance and people getting access to the right products when insurers are just simply stepping out of some markets?
And I think that's a very interesting question, because it talks about the affordability of insurance, of certain insurance products in certain areas in the world that are prone to some kind of catastrophe risk. And this is something that the insurance industry is also concerned about, because it has a social impact on their customers, and of course regulators around the world are trying to think in ways that how they can cooperate with insurance companies so that the retail customer, the end customer, can still get the coverage they need in certain areas. So some governments and some regulators have started to create some backstop programs where the government provides certain resources so that they can still provide key coverage, like flooding in the US and in the UK, or terrorism, for instance, since 9/11. So we might see this becoming more prevalent for certain areas in the world, and certain jurisdictions where there are government backstops.
Marcus, this is an industry which is brilliant at turning crisis into advantage. And ever since, I don't know, Hurricane Andrew, I've been following how premiums just have this wonderful ability to go up and stay up for longer on the back of natural climate events as well. The industry will make a lot of money out of the short-term pain, though, won't it?
Well, the industry has been exhibited globally. I mean, of course, there are certain pockets where this situation is different, like auto in the United States. But globally, yes, we can say that the industry, since the peak of the pandemic, actually has exhibited a good financial performance in different parts of the world. So, yes, there is a retrenching in coverages in the world for certain risks and in certain areas. But of course, the insurance industry is looking into maintaining profitability levels, and we are generally in a hard market globally for insurance and reinsurance. So it's the first time in the last 10 years that we're seeing premiums going up on a consistent basis for longer than 12 months, which is the cycle where we are now. That cycle could end this year, but we think that this is going to go into 2024.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.